All right, welcome back to another episode of the Me and Money podcast. Today, we're super excited to have someone who's very familiar with, and maybe too familiar, Olivia, with all the property and casualty insurance things going on out there. So I have Olivia Sharp, Vice President and Partner at USI. Welcome to the show, Olivia, and why don't you just introduce yourself to our listeners?
Yeah, glad to be here. Nice to see everyone. Personal risk management advisor for a little over 10 years, but it feels like eternity. Seen a lot of good things, a lot of bad things. Excited to be here and share a little bit more.
Awesome. Well, we'll dive right on in. So, Elliot, why don't you kick us off? What's your first question now that we have someone to actually talk about all this stuff who works with it on a day to day?
Yeah, thanks for being here, Liv. I was curious, what are the common pain points that people usually bring to you when they're looking to get new quotes or they're shopping around for insurance coverages? What's top of mind for them that you're seeing?
That's a great place to start because I think that question 5 years ago, the answer would have been drastically different than it is today.
Hmm.
Now, when I'm speaking with people, they're really looking for that partner, whether it's the confidence that somebody's going to take care and look at in their best interest, look out for the things that they don't know, while also making it make sense for them and their family and what's important. Maybe they've already had a claim, and so they know that they really want somebody who's going to make that as easy and seamless as possible, right? That's always a possibility. Or maybe it's just they're buying their first home and they really just don't know what they know, with insurance. They don't know what they don't know, those nuances. And so maybe it's just somebody making it all make sense. But really, it's that partner. And if they ask a question, the confidence that they are getting it answered in a way that makes sense for them.
Yeah, no, that's really interesting. Do you feel like it's become more like that, like with just all the like vast quantity and almost fire hose of information on the internet, like conflicting information? Do you think that's driving that, or I guess what do you think is causing people to seek that versus like a better price?
I do. People know just enough. They always have these like trigger words that they know and they'll bring to me. Maybe it's deductibles or they want to make sure that fire is covered in their policy. So they know that there's these differences. But when you don't work in it every day or you don't have a conversation with your advisor every day, I think it is a little bit of self taught university things that are making those conversations more important. But even so, every time we watch the news, every time we look at an article, there's a claim situation that is at scale. It seems like the whole world is always on fire all the time, and you hear the worst of insurance. And so people hear that and they get really concerned and they want to know what they can do to make that situation different for them and their family.
Yeah, yeah, no, that's true. And maybe on fire, maybe completely underwater, cars getting stolen left and right. That it always seems to be something out there.
Too soon, too soon. Yeah.
Yeah.
Everything can happen. And that's the conversation is we hope it never happens to you, but it can. And so is it important for you to have insurance a certain way if it happens, or are you fine with maybe not having the top tier protection and self-insuring some of those things? And everyone is so different. I think that's a personal insurance is really fine tuning what you expect to be there and how you expect it to look.
Yeah.
Liv,
Yeah.
maybe you could talk a little bit about when you're talking specific things that are covered, not covered. What are the types of conversations that you're having with folks that maybe are commonly not covered in I'm going to use air quotes here, a standard policy that you can add on as a rider or something else?
Yeah, it's without being too in the weeds. I mean, there's really two pillars of insurance, and most people don't even know that. So from the jump, it's having a conversation to know that we can put you in this other pillar of insurance, the private client space, right? The Chubbs, the Pures, nationwide private clients. So within that segment of insurance, you get a lot more coverage against a lot more things.
Hmm.
And that can make a whole difference for you. I mean, maybe that's extremely important. That's exactly what you want in insurance. Now, traditional insurance is, State Farm Progressive, the Geicos, and they cover theft, fire, like way more limited things. And so the first basis is just knowing that world and other side of the coin is out there. And then talking with each person to be a kind of an educational conversation of which one is going to align with them more and why that makes sense. Or not, because there's a lot of people it just doesn't make sense for. And so all home insurance, all property insurance is going to be very standardized against the big things. It's whenever you get to some of those smaller things. And what we're seeing, the tricky part, of course, right, is maybe a water loss will start from one root cause, but maybe it'll spill over, and then now you're looking at an additional cause of loss. And it's these multi-peril situations or these multi faceted things because everything is so dynamic that standard insurance doesn't do a really good job of being there for us. If it's very linear and your house just burns down, you're fine almost wherever you are. There's still things, but there's coverage for that. And so educational conversations always start from the beginning.
Yeah, and I'm curious, right? So like you said, multi-peril, like with the example of water, like I feel like my clients would hear peril and not fully understand what that means. So could you give an example of like what is a multi-peril water event that maybe would be covered under the more broad, line or pillar of insurance versus one that might be covered only under that second pillar that you were talking about?
Yes. And so peril just means the cause of the damage at the end of the day. So super simple. Anytime you look to use your insurance, they're going to ask what caused the damage, what went wrong. To us in insurance, that's a peril, but same thing. And if you're reading through your contract, if you're one of those can't sleep at night, that's what we're looking for. But water, oftentimes, let's say you leave the upstairs bathtub running and it leaks down and obviously causes damage to that room, the bathroom, but then it also leaks down to the kitchen underneath it. Maybe it sparks a small little fire situation. Now we have an electrical component, water component. The electrical component only went wrong because the water was there when it shouldn't have been. Those are multiple causes of loss and, causation of the damage. That gets really tricky because insurance companies really try to look and just segment themselves. They like it really separate, but that's not how the life and the day happens to us, right?
Right.
And so
Yeah.
sometimes that's better taken care of with other carriers than not.
Yeah. No, that makes a ton of sense. And you talked about like having someone to help decipher all these, pieces of information and clauses and contracts, like other than maybe wanting better service, or I commonly hear like, hey, I want a better price. Like, what are some other triggers, or what do you think the main driving reasons should be for shopping out, your personal lines, so at your home, auto, umbrella, maybe have some other, toys at home or vacation homes or renter insurance or something like that. Like, what are some of those other triggers that you would say people should be looking out for on a semi-frequent basis to just shop your insurance and see what's out there?
Yeah, the truth of it is if your insurance wasn't set up within the last 2 to 5 years, so much of the world has changed, whether it's the cost of materials, how we're living our lives. A lot of us are now working from home or in these remote spaces. Cost of everything triple doubled went up, right? So if you didn't just set up your coverage very recently, you're behind. And there's things that have changed that could be a big exposure to you, your family, and what you think insurance would look like before post COVID. So it's everybody has benefit. It's a great time now. But the other side of things is if something goes wrong, do you know who you would call? And do you know who's going to answer? Is it going to be something where it's a transfer to a transfer to a transfer? I mean, we're all so busy. I think one more call is really a lot for us, So if you have that partnership and that agent, sometimes it's just that. That's the missing link is you're going to call one person who's going to take care of it for you and make it as seamlessly as possible, on top of all the coverage limits and things being appropriate. The other part of the coin, I hate to say it, the hot ticket. A lot of us are talking about non-renewals and we're with carriers that we've been with our whole life. And now all of a sudden we're, being told we can't be insured with them. So having a broker, an agent, we can help that conversation, keep the relationship, know what's important to you and your family, and take care of that scenario and situation. It's a very real thing for various reasons. You don't want to have to freak out and start a whole new relationship, in a week to get your coverage placed.
Yeah. Yeah, I mean, that is a really interesting piece. And I think we should go there for a second, right? Like, because you said a lot of things have changed personally, like, or in our own lives in the last 2 to 5 years. But what has changed in the broader insurance industry, the broader insurance market? Like, we hear these stories in Florida and California, like, what the heck is going on out there? And is this something that clients maybe outside of those states should be concerned about, or what impact is it having on them as well, not just those in those extreme cases?
Yeah. It translates to just making it harder to self-navigate. I mean, I don't know how many times we go online trying to get a quote and we're told it's, can't compute, can't calculate, we can't get a quote online. And that's because of the changes. I mean, every insurance carrier is very particular on what they want to insure and how. And if you're not used to that, it just makes it harder for you to know what that means. I mean, why can't you get, like, why? It's just frustrating. It takes more time, more calls. And so if you have somebody, let them do that for you. Um, Really what it means is that carriers are they're wanting to cover less things, or they're wanting to cover them in more specific ways. I think appropriateness is kind of my hot word, my buzzword is like, is it appropriate for you to be insured where you are and why? And you often see that supported with the pricing that's offered and service. Like, you start to see everything align and it's because of that. It's because of that carriers being really happy or unhappy with what they're trying to insure.
Got it. Yeah, and go ahead, Elliot.
I was just going to say, what would you say to folks? I hear this commonly, like my premiums went up 25% or 40% over the past year. What would you say to someone who is navigating that right now?
It's a good time to look and ask yourself why, because it could be just that. It could be that it's not aligned for you to be with that carrier anymore for various reasons. And it could be a little price out situation. The other side of the component that we have to realize, it's just the truth. We've been paying too little for so long. And all of these losses, billion-dollar losses, we have to have a reserves. I mean, an insurance company has to be profitable, and I hate to look out for them because I'm an advocate for the clients. But at the end of the day, if they're paying billions of dollars here, billions of dollars here, and they're collecting pennies on premiums, I mean, they're taking rate increase to try to keep up with that. But if your premium's going up 25, 40% and you can't easily say why, you didn't just have a claim or you didn't add a new youthful driver, it might be a good time to shop and just make sure you're where you should be.
Hmm.
That's a great question. Yeah. I think everybody's dealing with that.
Yeah, and having been in this industry now for 10 years, right? Would you say this is like a cyclical thing that happens? Like, do we kind of go through these cycles of like, hey, like we have low premiums, like we're trying to acquire new policies, like, and then we're going to jack your rates up, and then like, will we go back? Like, how does that? I don't know. I mean, we always talk about market cycles and life cycles here on the podcast. So I'm just curious, like, do premiums and all of that kind of follow the same pattern?
I unfortunately left the crystal ball behind in the office. So that's the $1 million question. But I will say the outlook and perspective and my personal thought on it is no, it's not. It's not something that kind of cycles through. We're really just seeing a shift within the industry. Insurance was a thing where we were using it for anything and everything. I mean, a small ding in the Kroger parking lot, we'd put that through. And then we'd get a rock to the windshield, we'd put that through. A very small property claim would come and we'd put that through. That coupled with the increase of natural storms and fires, that can't exist healthily, right? So now insurance is just really trying to catch up to how we're using it and how much things cost, while also trying to be something that, you know, is makes sense. I mean, it can't pay for everything. It can't cover everything at such a small threshold and be profitable, and it's not a home warranty. And so it's just trying to adjust and trying to become this thing where it's really there for larger catastrophic or specific losses versus anything and everything. And we're seeing that kind of growing pain part of things. But that's really where we're trying to go. Once we get there, the pricing should level out, but it's that in between period that is catching everybody in a weird, kind of a weird place, and how they feel about insurance, right? I don't think anybody loves it.
Yeah.
And it's probably because we're in this chapter 4, of trying to make it something that makes sense for 2024, 2025.
Yeah. And I want to key in on that, like we used to use it for everything, right? Like a small thing or small house claim. And I've heard some stories of like, roof claims now, it takes more impacts per square foot to get a successful claim. Like what other terms or things do you see like being more commonly denied or maybe like expanded upon what needs to happen to like sufficiently get a claim approved?
That's a good question because it is so specific. Everybody's claim is different. I mean, the biggest thing that I often see is deductible. I mean, people will put through a claim and we're not even reaching a threshold where insurance can kick in and help you.
Hmm.
I think sometimes we just call our agent, and before we get enough information, they're just connecting you somewhere, or maybe you're calling in on your own and we're not even having the most basic checkpoint of, here's your deductible. How much damage do we think? Like, does that even make sense to talk about filing a claim? So I see a lot of that. I think that's probably the number one thing that I see as an agent is, claims that we can't help on even if we wanted to. And so that's where I try to step in. We never want to see that. The other thing is just coverage. I mean, if it is something that starts one way and ends up another, like in our first example with water and electricity, it's really important to kind of understand how your specific insurance can be there and perform and play in that arena. And any agent who places you with something should be able to have that conversation and say, Matt, I'm sorry that happened to you. That's not covered. That part is very black and white of insurance, and it never should come as a surprise. In terms of like, if you have damage to your roof, if it exceeds your deductible and it's a covered loss, your insurance is going to be there. So that's very linear. But if let's say you have a little bit of damage to your roof, but it's, a 35-year-old roof, right? That gets tricky because the damage might be so much more extensive because your roof was old and it should have been replaced anyway. So there needs to be a risk share of maintenance. We don't want somebody having a 35-year-old roof because we know that's going to be a much larger claim. That's a really bad deal. Your whole roof might blow off. Not a good day.
No.
We can all agree.
So you're saying we should talk about that, not just pray for hail to take out the roof so I get a free roof?
We see a lot of that, people just leave it and they're like, another storm will come through next year and maybe we'll get a new roof. That's part of it. Home maintenance, keeping up with things that we know are going to fail because of age and wear and tear. There's probably 50 to thousands of people thinking that exact same thing, making that claim, and that's not helping rates at scale. That's part of the problem.
Speaking of stories of loss, Liv, I'm curious. I think stories are very memorable for folks. Do you have any examples of large losses? And this could be good or bad, where the insurance was in place, properly protected, or, hey, it wasn't. There was this ginormous gap and they should have known about that or should have researched it more. An agent should explain it better, whatever the reason is. Do you have some of those stories to share for folks?
Yeah, I have tons of stories.
Let's hear them.
Now I will just keep talking for days, for eons. I mean, by the time they're coming to me, the situation is normally under insurance on properties. We're talking in the tunes of hundreds of thousands of dollars of what their home should actually be insured at today. So if they had a loss, and sometimes they do, and that's when they come to me, is after they had a loss and they got a fraction of what they should have otherwise, right? There was a cabin that was owned by two brothers. Family cabin, loved it. They went out there every summer. It was great. One of the brothers did the insurance, set it, he put it into place, set it and forgot about it, lived his life. Well, the cabin burned down, insured for $250,000. Granted, keep in mind, it's in the middle of nowhere, right? So, I mean, this was a complete total loss. Insurable value of the cabin was upward of, $850,000 to rebuild.
That hurts.
I mean, we can't make things be there that aren't written in the contract. So that's a painful one. And it's one of those things where they were like, well, why didn't my agent tell me? Like that should have been caught. Seems so simple. Liability is a big one. We haven't quite bridged on any kind of liability just yet, but I mean, last week I had a client who just got a brand new vehicle. So excited. First car. Let a friend drive it. Got in an accident and totaled the vehicle less than 15 minutes into the trip. Liability and exposure, that's a big deal because it wasn't even her driving, but it's her asset.
How does that work? Can you expand on that a little bit for folks? Like how, say I let a friend borrow my car. Am I protected? Does the friend need coverage? How does that work?
I mean, you're liable for anybody you give permission to use your vehicle.
So my coverage would extend over them driving then?
Yeah.
And their choices?
Yeah. I think a better, clearer example would be, I think parties, we're going into holiday season, people are hosting and having all the people over, good times, often serving adult beverages. You are liable for that experience. And so if somebody comes over, has a Bud Light, and then drives off, to go home, gets in an accident, they can come back and sue you and say that was your fault. And if that happens, it could be your earnings, your assets, investable assets, all of that can be involved very quickly. just as simple as letting somebody have an adult beverage over under your roof. So there's a lot of that.
Well, and
What
I
would be
think
ways to protect that other than not serving them an adult beverage?
Yeah, give them some water. No, insurance is there for that. I mean, liability is a big thing we keep talking about, but more so than that, you need excess liability coverage, right? So if your underlying policy is not enough, having that protection through an insurance product, and having that kind of overage buffer is a lot of peace of mind for people, especially, I mean, out in Seattle, we have a lot of people who are really young, who are high earners really quickly. And so sometimes it's not even their assets they're really worried about, but just protecting their net worth, or maybe some of the things that they're having through life products. Like they don't want any of that to become derailed if they, are negligent or find themselves in a suit, right? So
And when we're
that's my
talking
first
about
recommendation.
excess, we're talking about umbrella insurance, commonly the name for it, or are you
Yeah.
talking about something else?
Known as many names: umbrella, excess liability coverage, all the things.
Okay.
But I think more importantly than an insurance product, it's really like mitigations for how people are living their life. And so if we have somebody who's throwing a lot of parties, we talk about what can we do outside of insurance to minimize that from happening, or minimize that kind of situation for yourself. Like maybe you need to self-pay for their Ubers, or, we need to arrange a way for them to leave besides for their vehicles. And so the missing link, I mean, insurance, yes, we'll get that there. That's great. But there's so much we can do outside of insurance to mitigate and reduce things for people. Like almost anything. I could probably talk in a corner for days about what we could do outside of insurance itself just to make everything better.
I'm picturing you recommending a party bus and just picking everybody up. Is that
How great does that sound? And how easy is that? Because then it's on the bus driver. So you're fine.
Well,
Great.
well, that's interesting. So even like if I hosted a party and just offered to pay for someone's Uber like that, I know you're not legally speaking or make no one here is making guarantees or advice today. Okay, that'll be in the intro disclaimer. But
First and
this,
foremost, yes.
so essentially, if you're offering that Uber like payment, like that voids your liability in that case. I didn't know that.
I mean, voids is a strong one. It's, but it's way better than you having people over and letting them drive home at the end of the day. Because if something goes wrong, they're going to look back at you and in that situation. So offering an alternative, having somebody else drive, whether it's the fun party bus, which I think is going to be my new favorite recommendation, definitely going to use that. Ubers, yes. I mean, way better than having somebody drive themselves. And yeah, because you're offering them an alternative. So if they choose to not do that and then drive home, well, I mean, you offered that to them. That's way better than not.
Right. And I think it's a commonly asked question I get from my clients, but if you were to host a party, right, and then someone goes and crashes, like that falls onto your home liability, right? Not onto your auto. And that's one of the questions I get, like, why the heck do I need $500,000 or whatever on my house liability? Like what could go wrong?
Yeah, absolutely. But I mean, if you think about it too, I remember when I first started in insurance, like 500,000 was a lot to me. And if you carried that, you carried so much more than most. I mean, people would carry 100,000, 300,000. But now, you guys know everything adds up so quickly. I mean, 500,000 really, is that very much coverage? I mean, not really.
Yeah.
It's just scary how fast everything goes and
Well,
adds up so quickly.
well, I'm curious too, because I mean, umbrella insurance is like the easiest answer on the CFP exam. If it's an option, you should probably check that box.
Sure.
Have you seen any like cases? I know because when my clients get it, and I've just heard it from others too, like, oh, I have a $3 million umbrella policy. That sounds like a lot. Like, have you had any of those stories where even 3 million wasn't enough? This isn't to like scare the people listening, like you need to go get a $10 million umbrella insurance policy, but what are some situations where maybe those limits have even been exceeded?
I wish I didn't have as many stories as I did personally. Like, I wish they were just a friend of a friend story, but it happens all the time. The missing link with most people when they get the umbrella policy is they just go and get it and they don't know what limit they're getting and why. And so then they find out that, 3 million isn't even appropriate because they're really worth 10. Or maybe same thing, did this insurance 10 years ago and they've had kids since then, taken a job change, and they never update this part of things. And so the benchmarking conversation around what limit should be there is missed 90% of the time. But yes, I can give an example. An easy one was my client was out walking his cute dog, very small dog, size of my foot, size 9 dog, if you can picture it for y'all listening. Walking the dog, saw another dog across the street, went up and did as dogs do. They say hello, get a little rambunctious, no big deal. And the neighbor's collar part where it was connected to his dog came unhooked and was bouncing around a little bit and came up and nicked his face, just right under his eye. Couldn't have been bigger than like an inch, inch and a half. That didn't make him very happy. He felt very uncomfortable with that. And that was upwards of $8 million payout for the medical pain and suffering, everything. That happened so quick. Kid you not, upwards of $8 million payout when it was all said and done. Because you have to remember, it's negligence, so actual damage caused, but it's also defense costs. And when there's back and forth and things of that nature, defense costs can sometimes also add up quicker than maybe the actual damage and negligence side of things.
Wow.
Do you know what the attorney fees were on that? Like, if you had to ballpark it?
Like 7.9 million. Like, I'm just joking, but
right. It's probably a big part of it because everything, that's the inflation, and that's no different than an hourly rate, right? The other side of the coin is if a client has a lawyer, their own lawyer on retainer, there's only so many insurance companies who will let them use their own, defense. And so that could be a missing link of it too with certain clients if they want to use their own defense. That's an oftentimes kind of missing link. You don't want to be forced to use any resource that you're not comfortable with. And so when you're getting an umbrella policy, you're getting a limit of coverage. That's all fine and dandy. But you're also getting access to some of the best lawyers, which work for insurance companies. And that differs drastically from carrier to carrier.
Yeah. Yeah. And that might be a really good thing just to hit on too. Can you explain so when an insurance company, right, say I have my umbrella policy, I have a $2 million policy, and there's a $3 million claim against me, like what is the insurance company actually doing for me in that defense? And what is their obligation to me, the policyholder?
Yeah. The contract for that coverage is really fascinating if you're a nerd like me because it's written in the benefit of the holder. And so whenever you're making a claim in that space, all those resources are literally structured to be in your benefit, to support you and pay what is owed by you. So if you actually cause damage to somebody, we're there to pay that and make it as right as possible up to the limit that you've selected. If you're being wrongfully accused, we're there to defend that to the best of your interest because we don't want to pay out frivolously for things that we're not supposed to be. So, that's really the conversation. And in that example I gave with the dog owners, it was so much back and forth of, was this just a freak accident? Was this at fault? Are we better off settling this a certain way just to kind of end it here? Or do we need to keep knocking on doors and banging our heads on a wall? It's really in the interest of the policyholder. And that's a really unique thing. It's because it's so case by case. Each story is so different. I had one where it was kind of similar. It was a car full of friends. It was my client's daughter, couple friends. They were taking a road trip out of the state, and the driver got in a really bad accident that injured everybody in the vehicle. And that came back on my client. That was their claim, even though it wasn't even his daughter driving, but it was his car, right? And that was upwards of $3 million. Who wants to be the person to assign a dollar amount to somebody who's hurt? And that's the tricky part that we're finding with excess liability and umbrella claims.
Yeah.
Nobody wants to be that person. So that makes it even more important to have that extra wiggle room of coverage because it's going to go quick.
Yeah. So if I heard that correctly, right, like with an umbrella policy or with any liability insurance, right, the insurance company's job is to kind of poke holes in the case against me and prevent me from paying anything above the limit because they don't want to pay to the limit. Correct?
100%. Yeah, they're there to pay out only what makes sense and if it makes sense. And if not, they're going to defend why that shouldn't happen.
Yeah.
Mm-hmm.
Fascinating. Elliott,
It's fun.
do you have any other questions over there?
I think just a note on that, maybe from my own understanding, my understanding is some insurance companies charge the attorney fees against the umbrella limit, and some that is outside. Is that a correct understanding depending on the insurance carrier?
You're so savvy.
Okay. I think
You're
that's important for people to know and have a distinction of, because as we're talking about the amounts here, you think, oh, $1 million is a ton of money, but if I'm racking up $500,000 in legal fees with back and forth,
Yeah. Yeah, it's
half.
good to, oh, totally. I mean, it's a completely different situation if the defense costs are included in that limit, because that's going to just draw it down even quicker, right? But there are companies and situations that you can access where that's outside of the limit, which means you could actually be receiving more benefit than that initial, what's stated there, right? Because it's outside of that. That's what you could get for awards and actual negligence, but the cost to get there won't decrease that. And so understanding that is really on the agent, because if that's the case and that's the structure, it's really something to say, hey, Elliott, we're giving you a 1 million liability excess policy today, but you should understand that really you might see 750,000 of that. And is that important? Should we talk about increasing the limit, or are we comfortable with that? The transparency is really what's going to help make insurance be this healthy thing and continue on, and not right now it's very gray area. Everything depends, and we don't know if it's going to be there tomorrow. And it's up to the advisor almost to make sure that we can get past this stage of things and make it a healthy, breathing, existing thing again.
Yeah. Well said. I think a lot of people are surprised oftentimes, and you're not surprised until it comes claim time, because most people aren't testing their insurance until that point. So
yeah,
it's a
paper.
Good reminder to understand it.
Who the heck wants to read 90 pages of declarations? And I mean, we do maybe, but I don't think many other people do.
That's why we have so much fun, is because we just like to read through the weeds of the documents, right?
Yeah.
We're that select few.
Yeah, I guess we can wrap up with I have like a few myths, and Elliott, if any pop into your head, like feel free to chime in, or Olivia, if there's any that you hear.
Sure.
Like, is it true like certain colors of cars have different or higher insurance rates?
False.
False.
Not true. There was a time where I would answer that differently, and I thought it was true, but so much has changed within the realm of things. False.
Got it. And to that point, like, I think this one's going to be true, so I just want to get my prediction in, but like, does the make of the car matter so much as like the model, or is it really more model specific?
It's make and model. Definitely. I mean, what we're seeing right now with the Kias, I mean, I don't know if you know anybody who has a Kia and is having nightmares with their insurance. I mean, the call we started this call with a all too close to heart claim story for me, and that vehicle that was abandoned across the curb from me was a Kia. So that can have a big impact. I mean, really, when we think about it, it needs to be what we're insuring and how we're looking to insure it. So that's all the factors that go into anything that we could think of that we're trying to get insurance on.
Yeah. Yeah. And then I guess my last one on the auto side, like those little snapshot boxes, or like the telemetry, like, do those really reduce your costs? Or I'm a huge safeguarder of my own personal data, so I would never do that. But what are your opinion on those, or do they really lower rates?
It depends. Because we are all driving and doing things so differently, there's a lot of companies giving a big credit because they're trying to understand how we're living, and that's one way for them to do it. And so they're giving incentives to enroll and do that. Other carriers and companies that are really accessible are going to give less of a kickback for that, because they're just insuring more people at volume, and it's not painting a picture enough for them to, do much with. But there are some, I mean, for me personally, it was pretty sizable. But you don't think Big Brother's already listening and getting those details of when you don't, stop fast enough, or you take off too fast? I mean, might as well save $1.
I'm not saying that they're not getting my data, but could they use that against me to increase my rate?
Some do and some don't. So it's another one of those things that just depends.
That's okay.
Usual.
That's the top answer on this podcast. So
I know. Everyone's just gonna have to call me. We're gonna have to talk through it, because it always just depends. But I swear it's gonna be okay, and it's not as stressful as it seems.
Ooh, I have another one though. And this one I think is really important. If you're in an accident, the first person you should call is the insurance company. True or false?
Yeah, true.
True.
Yeah. I mean, obviously, first thing, safety first, right? So if you're kind of unsure or you're super shaken, I don't think you should, be calling your insurance, right? Like, get yourself to a safe place first, off the road, whatever. But yeah, you should call them immediately because some of those things and details, you'd be surprised how quick details change, especially if it's involving other people. And so having your insurance advisor aware is going to be a good thing.
But should
I
they
promise.
call should they call
Promise.
their agent or advisor first or the company itself first?
Agent advisor for sure.
And
Yes.
why? Why is that?
Well, not everything's covered. And we've seen it all. We've seen it all. And we're going to be able to help you make it as easy as possible, get it as correct as possible, and get it on track right away. And the last thing, I mean, I'm dealing with it all the time. It's like you file it one way and you're like, well, they said they're okay. It's not going to be a big deal. And you think it's going to be a bumper replacement. And then 2 weeks later, their back's hurting and it becomes this other beast of a thing that we didn't know initially. And now we're having to navigate legitimacy, or I mean, do we just need to add that onto the claim and take care of it, or is it fraudulent and they're fine? We need to know so we can
Yeah.
help you.
And what about those offers that'll come like weeks after you're in a car accident? Should you take it? Or I know we're not giving legal advice, but what is your
Who's,
opinion on that?
well, who's giving you offers week after the fact? And how often is this happening? Now I have questions for you. I'm like, what? Who's
Well,
calling you, giving you offers?
It happened to me one time, but I was told not to take it. Like
I
it
feel
was
like that just depends. I don't have enough information to give advice on that one.
Okay.
Did you take it?
No, I didn't.
Okay.
And I'm glad I did.
Perfect.
I've got a question to add in here, maybe to wrap things up.
Sure, yeah.
So, Liv, people listening today, what should be their number one takeaway item? Like, if you were to say, hey, you listened to the podcast all the way through, what should they do for their own insurance? What's the takeaway here?
You should know what you have. And if you can't answer the question of knowing what you have, even high level, it's time to circle back. And if you are trying to do that and you think, I don't even know who to reach out to, it's a great time to sit and maybe take the time to find yourself an advisor. And if you're with a company that only offers you advice within like a single product, like I'm just going to use State Farm as an example. I used to work with State Farm, so that's what comes top of mind. But if you're with one of those companies, I highly recommend you also kind of fact check that with a broker, somebody who can go out and get multiple quotes for you all at once. Reason being, when you're anyone can find an answer within one place to look and make that make sense, but you don't know what's missing and maybe available elsewhere. So making sure it's as broad as it can be by fact checking with a broker who can get you all those quotes. Save you a lot of time.
Yeah,
Excellent.
and we'll definitely leave Olivia's contact info in the show notes. So if that's you listening to this and you're like, oh my gosh, I don't know what any of those things are or what I have or how it's going to work, please feel free to reach out to her and she'll set you up.
Please, I look forward to the conversations and the questions. It'll be good. This was a great time. I really appreciate it getting to meet with y'all this afternoon.
Yeah, thanks for joining us, and we're happy to have you back once your car saga has resolved itself, and maybe we can have a little, confessions from an insurance broker on how their claim went.
We'll share that in the next episode for sure.